In the past few videos, we've talked about how to buy a stock on a pullback after it's gapped up to new highs, and we'll continue with that using MELI as an example. MELI is a trade that we placed on 8/13 in our Wagner Daily newsletter, our swing trading newsletter. And I'm going to take you through what we were looking at prior to our entry and at our entry point, and what we've done since the entry point. So as you can see on the daily chart here, we have MELI forming a basic cup without a handle pattern, and it didn't have time to handle because of earnings, so it reported earnings and gapped to new highs. Now, just looking at a daily chart, you can't really tell if this is to new 52-week highs or all-time highs. And on the monthly chart here, you should be able to see that this is a move to all-time highs right here. This is the move on this bar right here. So MELI, since breaking out to all-time new highs at 100, failed to really extend much beyond 20% gain, and based out for 1, 2, 3 months, or 2 to 3 months before gapping up to new highs again. So it's not at all extended as it gaps up to new highs. It's basically just moved out from a 3-month base here. So buying it on the open on the day it gaps is fine as long as it holds up within the first few minutes. If it begins to fall apart and keeps on making new lows for the morning, it's probably best just to exit and wait for a pullback to a moving average. And that's basically what we did. We stayed away from MELI on the open, and we waited for a pullback. Now, when there's a significant gap up, we wait for pullbacks to a 10 or 20-day moving average. Sometimes you don't know which one's going to hold, and so you may have to enter twice. Now, MELI pulling back into the 10-day MA here, and we're starting to get interested in the price action. And on this day, we see a nice reversal bar, and we decided to, let me bring that bar right back up. We decided to go long above that day's high. So on the 12th, we alerted our subscribers of a potential buy entry in MELI over the high of 812 at around 126.60. The next day we were filled, and it went higher on a pickup in volume, which was a good sign. However, the following day, the price action pretty much gave back almost the entire advance, and by the next day, the price action pulled back in and undercut the prior low and pulled back to the 20-day EMA. Now, the 20-day EMA, if you had not taken an entry at the 10, would be the ideal spot for an entry. So fortunately for us, on our buy entry on 812, we put in a stop about 8% away just to give the setup some wiggle room, because we really felt that MELI has the potential to go at least 25, 30, 40% higher over the next few weeks. So an 8% stop still gives us a 3-4 to 1 reward to risk ratio. So we're fine with that. So over the next few days, MELI shook everyone out below the 20-day EMA, as you can tell with all this price action over here. And then it put in one last undercut of the 20, which took it almost down to the 50-day moving average. And so this candle right here was make or break time. It either had to reverse, or it's going to touch the 50 MA and probably take a few more weeks to push higher. And the very next day, it did reverse. And we actually mentioned MELI as a potential secondary entry point for those who missed the first entry above this 123 area here, which would coincide with a break of the downtrend line, and the price action will be back above this range here and the 20-day EMA. And as you can see, the price action did follow through after another little shakeout right here to the upside on a big pickup in volume here on 9/9, and then it pulled back into the 20-day again. And we actually recommended MELI again for another potential buy entry for those who missed the first two entry points over 128. Keep in mind that we're still in from our entry at 127.40. Okay, so over the next few days, MELI triggers over the 2-day high, but really doesn't go anywhere, just stays in a tight range. And then it finally exploded higher on Friday on a decent pickup in volume. It was above average volume, certainly the biggest volume we've seen in the past 2 weeks. Now moving forward, we'd like to see MELI hold up above this uptrend line and the 20-day EMA as it pushes higher. So it might pull back in here, go sideways, but the price action should hold above this uptrend line and the 20-day EMA as it runs higher. And we're looking for about a 20 to 30% move at the very least from our buy point. So that's it for today. Just a quick review of how we like to use pullback entries in stocks that gap up to new 52-week highs. And again, we do this with stocks that are trading near 52-week highs. These stocks typically have solid earnings and really strong relative strength, and these are typically leadership stocks. If you would like to learn more about our style of swing trading, you can go to our website at www.morpheustrading.com or our blog at www.morpheustrading.com/blog. Well, thanks for joining us and good luck with your trading.